Hey business warriors, Business Shifu here, and today we are going to talk about the differences between a C-Corp and an S-Corp. These are two types of corporations here in the US. Obviously there are others, there are non-profits, there are LLCs, etc. If you want to know the difference between an LLC and an S-Corp, that's an LLC partnership versus an S-Corp, we have another video on that. I'll put it up in the corner or in the end of this video or whatever, but this video is going to look at C-Corp versus S-Corp, okay? So let's first of all break down the kind of characteristics of these two different types of corporations. So first of all, with the S-Corp, it offers you limited liability. Actually, LLCs give you limited liability too. That's what it stands for, limited liability corporation. An LLC can elect to be taxed as an S-Corp. It gets kind of complicated with that. But yeah, basically S-Corps provide limited liability. They can only have up to 100 shareholders. This can vary by state, but federally, it's 100 is the maximum. And US citizens and permanent residents are the only ones that can be shareholders, okay? You cannot have foreign shareholders. In addition, there are several types of trusts that can be shareholders, but since we're talking about individuals, it's US citizens and permanent residents only. You can only have one class of stock. Certain industries are excluded from S-Corps, and profits pass through to be taxed at personal rates on your personal tax return. Now, with an S-Corp, you are eligible for the 20% qualified business income deduction, which came from the Tax Cuts and Jobs Act, which was brought in last year. The SALT deduction for state and local taxes is limited to $10,000 like it would be with just personal income, because the income goes through and is taxed on your personal return. So it's the same as personal rates and personal deductions. And the company cannot retain earnings. Basically, everything, all profit that's earned by the company passes through onto the personal tax return and gets taxed at personal rates. Now, the company could keep earnings in its account, but the members would still get taxed on those earnings, okay? So typically, the company just has to pay out the earnings. Otherwise, members are getting taxed for money they haven't even received. So you would kind of have to. Now for a C-Corp, so C-Corps also offer limited liability. Owners can be, basically there's no limit on owners. So they can be US citizens or permanent residents or foreign persons, foreign corporations, etc. You can have over 100 shareholders. It's separately taxed as its own entity. The current US tax rate is 21%, down from 35% thanks to the Tax Cuts and Jobs Act. And then of course, obviously you would be susceptible then to double taxation because the company is taxed itself and then the money it pays out as dividends is also taxed. The C-Corp offers maximum separation between personal and business. Obviously LLCs and S-Corp, they do separate your personal and business finances to an extent, but C-Corp takes it to the maximum. You are 100% separated. You get unlimited SALT deductions, that's the state and local tax deduction, on whatever's paid through the company, okay? Obviously on your personal tax return, you don't, that's your personal stuff, but the company itself has an unlimited state and local tax deduction, and you can retain earnings in the company for future use, so they'll just be taxed at the corporate tax rate, and then you can leave them in your account, and your members will not have to pay tax at personal rates on those earnings unless they've been actually distributed as dividends. If they're just left in the company, you don't have to pay. All right, so from this, we can draw a little bit of a conclusion straight away, is that from a tax point of view, S-Corp is gonna, is gonna save you money. It's gonna be more lucrative from a tax point of view. However, C-Corp is gonna give you many more options for future expansion. You can attract foreign investors. You can have more than 100 shareholders. So if you're going big with your business or you want any foreign investor at all, you're gonna wanna be a C-Corp. C-Corps also, you can retain profit for future use. There's a lot more sort of like technical legal stuff you can do with C-Corps rather than with S-Corps. S-Corp is more of a simple structure. So if you know your stuff and you're gonna be doing big business in the future, C-Corp has a lot more of expansion potential. And it also looks better for banks giving you loans and stuff. They generally won't be as likely to ask for a personal guarantee, whereas with an S-Corp, they can still often ask for personal guarantees, and you kind of have to fight with them, not to give it for loan products and just to go off the business credit of the company. Anyway, we're going to give a couple of examples now of the amounts of tax that an owner of a company would pay, whether it was a C-Corp or an S-Corp, and we'll look at the differences. First of all, though, I just need to point out, I'm not a CPA or an EA, so just take this as an educational example. We're just illustrating the principles. If you want advice on your own financial situation, I suggest contact your CPA and get them to run these numbers for your own income level. You can also try doing it yourself using various income calculators online, but obviously if you want the most accurate example of it, do use the services of a CPA, someone who's qualified to do it. But with that said, let's just get into having a look at this example. So first of all, we're going to go for an S-Corp guy, an owner-manager of an S-Corp. Now, if you are an owner-manager of an S-Corp, you do need to pay yourself a salary. If you're just a shareholder who doesn't do anything, you can go without a salary and you just get distributions of the profit. But if you're actually managing the company actively, you're going to need to pay yourself a salary that is comparable to other salaries in your industry. So we're going to say there's $100,000 that can be paid out as profit to the owner. Okay, since he's an owner manager, he needs to take a salary, and we'll put half of that as his salary, so $50,000, which is quite close to the average household income of the US. So that's going to look good for the IRS. It's an average salary. They're not going to kind of audit you because you're paying a tiny salary and taking loads as a dividend, etc. Okay, so this guy has $50,000 salary. Married filing jointly, he would take home $42,666. He pays $7,334 in taxes. His tax rate is 12%, then FICA taxes of 7.65, state taxes of 1.75, and I'm doing this for the state of New Jersey, and I'm doing it married filing jointly just because that's what I am. But if you want to work it out for yourself, you can go on one of those income calculators and you can, put single filer. You can pick your state. Maybe you're in like Texas or Florida, you have no income tax, then you'd be paying less tax, etc. You can work it out for yourself. But for the purposes of this example, we're doing married filing jointly in the state of New Jersey. So then out of this $100,000, we then have a $50,000 paid as a distribution. Now with the S-Corp, that is taxed at your personal rates on your personal return. So if the whole $100,000 was just taxed at personal rates, you'd take home $80,972. But don't forget that extra $50,000 actually has a 20% deduction for the qualified business income, okay, from the Tax Cuts and Jobs Act. So on $10,000 of that, you don't pay any tax at all, which is great, okay? And in addition, you don't have to pay FICA taxes on this part either. So he just ends up paying 80% of the federal and state income taxes, which he owes on this portion. And it works out at $6,295. So he pays $7,334 on his salary and $6,295 on his profit distribution, which works out at $13,629 with take-home pay of $86,371. All right, now let's look at our C-Corp guy. So he is also getting $100,000 and $50,000 he'll take in salary because he's an owner manager. So he takes home $42,666 and he pays $7,334. That's exactly the same as the S-Corp guy. Then the next $50,000 is considered profit from a tax point of view. So the company actually has to pay corporate taxes on it. Now, although the corporate tax rate is 21%, states also have individual state corporate tax rates, so the average across the country works out at 25.7%. So of that $50,000, he is paying $12,850 in tax. Well, not him, the company, okay? So the company is paying $12,850 in corporate taxes on that. Then on his personal return, all the money above $50,000, I believe he's getting around $87,000 or so once the business has paid its taxes and distributed to him his share of the profit, so his salary, and then add that to his distributions, his dividends. It's about $87,000. On the upper part of it, the dividend part of it, he actually, as long as he's owned the company for a reasonable amount of time, they're going to be considered qualified dividends. So he's going to be paying tax at the long-term capital gains rate. Now, if he'd only owned the company for a very short period of time, like less than 6 months or so, he will pay at personal rates. But as long as he's owned it for a reasonable amount of time, I'm not going to go through exactly what can qualify as a qualified dividend. That's probably, another video right there, enough material for another video. But he's going to pay at the lower rate, the long-term capital gains rates, as long as those dividends are qualified dividends. Long-term capital gains rates are 0%, 15%, and 20%, okay? So that's very favorable for him. And actually a large part of his dividend will be taxed at 0%, so he'll pay nothing. And just the upper about $10,000 of it, he'll pay at 15%. So the total amount of tax that he's going to end up paying is $7,334 on his actual, his $50,000 salary, then $12,850 paid by his company, which he's the owner of, so it's kind of like him paying it, and then $1,260 on his dividend. So he's going to end up paying, or him and his company combined are going to end up paying $21,444. So you can see he's paying more tax than the S-Corp guy. And let's just put these side by side. So both with $100,000 worth of income, S-Corp, $13,500 in tax, and you take home a net income of $86,371. Then we got the C-Corp, $100,000 income, or you consider $87,150 after the C-Corp pays its tax. And then, so the total tax paid between the person and the company would be $21,444. So your net income, your take-home pay would be $78,556. So you can see that the S-Corp guy is better off to the tune of about $5,000. So you're only going to really need a C-Corp if you want one of the other things that a C-Corp provides, like the ability to have foreign investors, the ability to have over 100 shareholders, or if you really want to very clearly separate your business and personal income. And this is actually can be very good for certain types of business loans. Banks look more favorably on a C-Corp than they would on an S-Corp. They can see the corporation is much more clearly separated from you personally. The business credit score can be developed better, etc., like that. So, it's only really if you have one of those reasons that you would want the C-Corp. Otherwise, from a tax point of view, you're going to want to have the S-Corp. It's much better. And think about that. You save $5,000 in taxes. You could do a lot with that. You could go on vacation. You have a great vacation. Now, we should point out as well at the end of this video, though, that the gap between the amount of tax you'd pay with C-Corp and S-Corp has shrunk since the tax rate was brought down to 21% versus 35%, especially on larger companies that are earning a lot of money. That gap between the pay has really shrunk. So now some accountants kind of point out that, well, you can consider both. And if you do have one of the other reasons of becoming a C-Corp rather than an S-Corp, it might actually be beneficial to be a C-Corp. So guys, once again, if you have a specific situation, go and employ the services of a CPA and get them to work this out for your situation. This is just sort of displaying the principles, okay? Thanks so much for watching, guys. Please leave a comment below. We'll try to have more videos for you every week on the Business Shifu Show. We'll see you next time. Bye-bye.
Must be more to life than this. Reaching for the stars, traveling so far, like a dragonfly. Just grab my hand.